Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 24th, 2025, and we're diving into Domino's Pizza's latest earnings report for the fourth quarter and fiscal year 2024. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Domino's has had an interesting year, and I'm excited to break down their performance and future prospects.
Revenue and profitability overview. And let's start with the top line. Domino's reported a total revenue of $1.44 billion for the fourth quarter, marking a 2.9% increase from the previous year. John, what are the key drivers behind this growth?
The revenue growth was primarily driven by higher supply chain and U.S. franchise advertising revenues. The increase in supply chain revenues was due to a 4.4% rise in food basket pricing and higher order volumes. Additionally, the return to a standard 6% advertising contribution rate boosted franchise advertising revenues.
And how did this impact their profitability?
Domino's net income for the quarter was $169.4 million, a 7.7% increase year over year. This was supported by a 9.2% rise in diluted EPS to $4.89, driven by higher net income and a lower weighted average diluted share count due to share repurchases.
Operational efficiencies and future outlook. Domino's has also shown improvements in operational efficiencies. Can you elaborate on their income from operations and cash flow?
Sure. Income from operations increased by 6.4% to $273.7 million in Q4, thanks to gross margin growth within the supply chain and lower general and administrative expenses. For the full year, free cash flow was $512 million, up 5.5%, reflecting higher net income and efficient capital management.
What about their future outlook?
Domino's is optimistic about 2025, with a focus on market share growth and value creation. They've increased their quarterly dividend by 15% to $1.74 per share, signaling confidence in their cash flow and long-term strategy.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $4.95 for the quarter. However, Domino's reported an EPS of $4.89. John, what does this slight miss mean for the company?
While the EPS came in slightly below the forecast by 0.06 cents, the overall financial health of Domino's remains strong. The miss is minor and doesn't overshadow their solid revenue growth and operational improvements. The market might react to this, but the company's fundamentals are sound.
CEO insights and strategic initiatives. CEO Russell Weiner mentioned the Hungry for More strategy. How has this impacted their performance?
The strategy has been pivotal in driving order count growth despite a challenging macroeconomic environment. In the U.S., Domino's has gained significant market share in the QSR pizza segment, and internationally, they've achieved their 31st consecutive year of same-store sales growth.
That's impressive. What are their strategic priorities moving forward?
Domino's aims to continue expanding its market share and enhancing value for franchisees and shareholders. Their focus on operational efficiencies and strategic growth initiatives positions them well for sustained success.
Key takeaways. In summary, Domino's has delivered a strong performance in fiscal 2024 with notable revenue growth and strategic advancements. Despite a slight EPS miss, their operational efficiencies and market share gains are commendable. John, any final thoughts?
Domino's is well positioned for future growth with a robust strategy and strong financials. Investors should keep an eye on their continued expansion and dividend policy as indicators of long-term value.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Domino's performance in the comments below.